Eric Mwathe, themwathe.com, with the weekend market analysis for world markets for the weekend of April 25th and April 26th, 2015. Let's take a look at how world markets closed on Friday. We can see here Asia was pretty much a mixed picture, but the biggest mover was definitely in Australia, up 1%. We see that Japan was slightly down, China was slightly down, Hong Kong was up. And so that's the mixed picture. If we take a look at how Europe closed, let's take a look here, and we're looking at the European markets showing also net a nice move on Friday. If we take a look at how the Americas are trading, just so we can see how Brazil, which we're going to discuss in the video, is shaping up right now. It is up nicely, about 1.75%, which is great. You take a look right now in the US. We are looking at the markets, especially on the NASDAQ, working on after yesterday's all-time fresh daily closing high. The NASDAQ is posting another nice day, so we'll see how that goes. The Dow and the S&P 500 slightly to the upside. Right now we're looking at crude oil, which is down, gold is down. All right, let's go to the charts, and we begin by taking a look at the Canadian market, which is working and doing its best to break out above recent weekly closing highs of 15,388.43. So it needs to break out above that. Otherwise, we've been talking about the resistance on the weekly based on this line here, and this line has been quite instrumental in telling us when the market was due to pop or due to show resistance. As you can see, after this break, this became where traders would watch for resistance. Both instances down. Finally, we broke out above that line for a nice trend higher. We did show support here, which was the lows there. Recently, we broke below that line, which was these highs before this plunge here. Now we've come here recently, saw another drop, and again double bottom resistance here recently for another drop. And now we are going to have to decide whether this is going to be resistance for another drop, or if we can break out above that level. So again, the level to watch is 15,388.43, which is where the market closed about 3 weeks ago. If the market can break out above that, the Canadian market has a chance of following world markets at new highs. If we take a look at the daily, we can see here again it needs to break out above recent daily closing highs of 15,450.87. If it can break out above that level, then this market should have a chance of recording new highs. Otherwise, unless it can break out, maybe this is a market that could pull back. So that would be the level to watch. It needs to be above 15,450.87 if it's going to break out. If we take a look at the RSI, it's been stalling on this line here. As you can see, every time we hit that resistance, market's been coiling back. So recently we've been looking at this to pull back, and that makes sense because it hit that line. Recently we went above that level, we did show resistance. So for this market to confirm upside potential, it needs to break out above 15,450.87. We take a look at the monthly, and on the monthly it just needs to clip this 15,625.73, which is the recent closing high on the monthly, which happens to be also the all-time monthly closing high. It's not too far off from there. So if you see this one jump above that previous monthly closing high, you have to respect the potential for upside action. If we take a look at the Brazilian market, we see here that it is now showing a breakout and a follow through. So today it's even higher, about 1.7% higher. So the chart looks like that, and that is indeed very powerful. We see that it is now trading above 69.10 on the daily RSI, which might explain the explosive move on Friday. If we take a look at the RSI on a breakout level, there was a resistance line here, and the market did break out above that beginning of April, which was this entry here. which was another short-term move to new highs there. And we can see that the market on the RSI has gone all the way back to test that line and now moving higher. So there was another reason to go long somewhere here because of the support on that line. And again, that line is just the extension of the previous resistance line here. And once the market did come and show support here, that was a nice place to go long. And now we are seeing a fresh breakout above 54,918. So nice move there. Right now looks good unless the weekly charts become a problem. In fact, if you take a look at this long-term weekly chart going back to 2009, we can see that this market has been struggling to hold the RSI level right there. Right there is where it's been stalling. All these highs from here, early 2010, there was resistance there, double bottom resistance on the line, which was the highs there. Late 2010, we went above the line, back below it for another sell signal. We touched the line here, middle of 2012. There was a resistance there on the price, another resistance on the line. The price did make a high and a pullback. Recently, we broke down below this trend line also, below the line, and also below this trend line here, which happened to be the highs of 2014. So we are trading back to this general area. If we cannot hold above that blue line resistance, then this is where maybe it starts stalling. So yes, the daily looks good, but now we are back at an area where the market has been stalling on the weekly chart, which also does raise the question, if we see resistance, that is where maybe there's going to be a serious pullback based on the past couple of years of resistance on the weekly time frame. Let's take a look at some European markets. We begin by taking a look at the French CAC 40, and just want to show you that the line that we've been using that has been reliable is this line here, where the market did break out above that resistance line for a nice entry here. That entry also happened to be a nice wedge breakout, so nice entry. Since then, we can take the same line extension to find entries back into the market after short-term pullbacks, just like we did here with the double bottom support on the line, which happened to be lows there, support here on the line, which were lows there, double bottom support, lows there, and now with Friday's nice move higher, showing double bottom support, looks like the French market is also showing a reason it could be bouncing over the next couple of days, next couple of weeks. Of course, if it breaks back below that line, so if it trades below that line where it has been showing support, anything below this line would suggest that now it's due for some type of a pause or a pullback. So if it breaks below that line, that would suggest that momentum is now to the downside. As of now, it is above that line, so we have to assume that this market continues to look good. In fact, if we take a look at the weekly continues trading above 69.10, which is a sign of strength. If we take a look at the monthly, same type observation on the French market, and it is the fact that the RSI is holding above 69.10. Again, that is a sign of strength. So there you have it. It continues to look strength in my opinion. If we take a look at the German market from a daily view, we can see that it is back to testing the 50-day moving average. It did have a slight move on Friday, so that support seems to be taking place on the 50-day moving average, which is good. Now keep in mind that if we go back to the previous highs, there was a slight problem, hence the recent pullback. We made higher highs in price, but we made lower lows on the technicals, and that could explain the recent short-term slide. But the market has come back to that 50-day moving average. As long as the 50 is holding, that should suggest that it could be due to start moving higher again. We also see that on the RSI it came back to this line of support here, and this line of support is generated by this entry. So this entry right there gave you this nice entry off the lows, and the market has been coming back to that blue line with support and bouncing higher. Support on the blue line with uniform activity and bouncing higher, and with Friday's slight move higher, it seems like this is double bottom support on the line with uniform action, suggesting that the German market is poised to go higher over the next couple of weeks, probably over the next couple of days and months. We shall see. As long as this line is holding, let's give that market the benefit of the doubt to continue moving higher. We also see that the German market continues trading with its monthly RSI holding very well, continuing to hold above 69.10, and as long as it's holding above 69.1, that could suggest that this is still a strong market that should be respected. The FTSE continues to trade a little bit nicely, and it is also close to fresh highs, but we continue seeing that it is one of the markets that has yet to break out on the RSI. So you can see resistance on the top side of the daily RSI, and we also see that it has been unable to move above this line also. So this market, even though it's holding up very well, a little bit of a laggard in terms of performance when you compare it with other European markets. You can see that on the weekly, even though it's been showing an upward trend here the last couple of weeks and months, but you can see the RSI has still yet to break out. If this RSI can break out, that would put another level of upside acceleration. Otherwise, right now we are looking at the market still showing resistance on the line that it's been struggling to hold above this. So depending on how things go, if this continues being resistance, then obviously eventually over time it's gonna suggest lower prices. So we'll see how things go. A breakout would be exactly what the bulls want to see in the London FTSE. If we take a look at Hong Kong, we can see that the Hang Seng finally did close higher on Friday, breaking out above recent daily closing high of 28,016. So that breakout has already taken place, which is great. We can also see that ever since the RSI broke out on the daily, this market has been on fire. I mean, from this breakout here off this nice wedge, this market just took off and has been trading well over the last couple of weeks, closing at recent 52-week highs. We also see that the RSI continues holding above 69.1, which is a sign of strength. Take a look at the weekly, and we can see the weekly continues to trade well, continues to hold above 69.1, and also continues to hold above the prior breakout line. So everything looks great here as far as the Hang Seng is concerned. Take a look at the monthly, and the monthly is also showing that it broke out to multi-year highs. So that's a very powerful breakout, suggesting over the next couple of weeks and months, this market should still record even higher prices. We see that it broke out to multi-year monthly closing highs going back to 2008. So that's a fresh 7-year, 6-year breakout on the monthly RSI. And so that is a market that has recently just started moving. Maybe over time, this one should record higher highs, even past 2007 highs. The Chinese market continues trading with its daily RSI holding above 69.1. In fact, all time frames have been holding above 69.1 over the last couple of months, which might explain this acceleration in price. As long as the RSI is holding above that threshold, we should continue to see even higher prices. Now, if you take a look at the weekly, you see that the weekly also shows the same type action, with the RSI generally holding above 69.1 since this breakout sometime in about August, September of last year, 2014. So the RSI has held above 69.1 throughout all that period, which might explain this nice explosion in price. If we take a look at the monthly looks great. We've been talking about this the last couple of months, that this market continues to look very strong As you can see, the RSI here moved above 69.1 sometime late last year, which was during this breakout above this wedge. So this has been a strong market, continues to be a strong market. As long as the RSI is holding above 69.1, you should expect higher prices. The last time it did something similar to this was here between late 2006 and middle of 2007, which from this level here was the breakout at above 69.1. The price range there was, believe it or not, around 1600. It went all the way to 6000. So as long as the RSI holds above 69.1, the Chinese market should also be very strong. Not to be left behind is the KOSPI. As you can see here on the daily, KOSPI also recording fresh move to fresh 52-week highs. You can see that RSI did break out recently, and that breakout in the RSI took place with the RSI jumping again above the threshold number of 69.1, and that also corresponds with this price breakout. So the KOSPI also joining other Asian markets in recording a very fast-paced environment. We take a look at the weekly, and yes, at some point they're going to have to pull back, but until we see evidence of that, we have to assume the markets continue to be strong. KOSPI also broke out above this almost 5-year weekly trend line. So there was a breakout recently at that point, which was also price breakout here. Ever since then, it's been recording it has recorded three fresh up back-to-back weekly closing highs. So that's a fresh market breakout, suggesting that this could be going on, and months down the road it could be trading even higher irrespective of shallow pullbacks. We see that on the monthly it also break out above this declining RSI trend line and also moving to multi-year RSI highs. So that's a very strong market. Price also broke out here and now trading at multi-year price levels. So that's another market that is just now beginning to move. If this is the case, as long as it's breaking out and looking this way, we can assume that months down the road it's going to be trading even well above current levels. Now take a look at the Nikkei, and Japan was down slightly on Friday, which means that this could be a negative divergence where we are making higher highs in price, but the RSI could be making lower lows and confirming lower lows. If that's the case, maybe this is the first evidence of a pullback as far as the Japanese market is concerned. But if we take a look at other time frames like the weekly, we can see that the weekly now trading above 20,000, yet the RSI continues to look good. And as long as RSI is holding above, you guessed it, then this market should also be great. In fact, if you take a look at the monthly RSI has been holding above our threshold, where we need to be always looking for stocks to go higher. So ever since that market moved above that level, it continues to trade out well. And even this, as long as the RSI is holding above 69.1, expect this market to continue recording new highs. If we take a look at the Australian market, we can see that it had a nice move on Friday. So the chart looks something like that. Nice move on Friday, which makes a lot of sense, because if you take the RSI line connecting the lows, you can see that recently we've come here and we've shown double bottom support here and again there. So nice double bottom support, and also it happens to be on this line where it recently found support. So you can see that the lows here came on the same line. So those two lines did hold the market together, which might explain the nice move on Friday. We also seem to be bouncing around an upward trending 50-day moving average, which is also a sign of strength. On the monthly, the Australian market already broke out in price here about 3 months ago. But what it needs to do, it needs to be above this line of resistance. If this is to record even higher highs, like the Korean market or Japan or like maybe China, it needs to also move its monthly RSI to fresh highs. Right now it looks like this is where it could stall on the monthly, so we have to watch for that. And so this line connects the tops also. So there's two lines coming from the top side, resistance potentially, and also from this line here. If it can move above those two lines and trade above them, then it could have a chance of breaking out. The level to watch is 5,898.48, which is the recent monthly closing highs. If it can jump above that, then this market should also be looking to go higher. If we take a look at the Russian market by way of the RSX, the ETF that tracks the Russian market in the US, we see that there was a recent RSI breakout here. Now the problem here is that it needs to be above this line here, which was the breakout level somewhere here for a nice entry during this breakout. But now we are trading below this line. If this continues being resistance, then I would expect this to be starting to pull back here. So that's the line I would watch. Below that blue line, anything coiling back below that line is a sell signal. Also keep in mind, last week I did discuss the probability that this is where it could stall based on prior stall points. As you can see, if I draw this correctly, it stalled here once before, which was middle of last year, off the highs there, and we saw the Russian market plunge. And actually, if we back test the same line, we can see there was another sell signal here also, which was off the highs there, and again another sell signal here, which was off these highs. So the Russian market has come to a tricky spot. If this is confirmed resistance as we go into the next couple of weeks, then that suggestion is that we might be seeing lower prices. Otherwise, for it to move higher, it definitely needs to be above a proven line of resistance. If we take a look at the EDC ETF that tracks the emerging market, we can see a recent RSI breakout. And just like we saw in Brazil, after breaking out, it's come back and tested the line where it broke out. So after moving above that line there for a nice move here in price, it has come back and did show support. So as long as it is trading well, RSI above 69.10, let's give it the benefit of the doubt that this is actually indicating higher prices for emerging markets as of right now. Of course, the biggest threat to this chart is on the weekly RSI. As we can see previously, there was a sell signal early 2013, which was these levels here. So this could be a trap, because if you extend this line, you can easily see that this has become very reliable sell signal area. Sell signal here in the price. We can see finally we did move back below that level, which was this sell-off period. So we've come back to the same level. If we cannot hold above that line, the thinking here is that emerging markets could be trapping people, or at least this instrument would be setting a trap. Otherwise, if it shows resistance here in the coming weeks and starts to roll over, that would suggest that this instrument has peaked. Otherwise, for it to do well, it needs to be above this well-defined line of resistance. Let's take a look at the Nigerian market, and we are using the NGE ETF. So NGE, the ETF that tracks the Nigerian index, and we can see that this one does trade with crude oil. As you can see, this drop in price all corresponds with a drop in crude oil. Even the most recent recovery is just a mirror of what crude oil has been doing over the last couple of weeks. So now we look at the possibility of becoming resistance. So the Nigerian market could be seeing resistance on the weekly, because if you take the previous break, this break was very important for this market, because that break in the RSI corresponds with this price coming off the highs here. And as of right now, it looks like we might be seeing resistance. So as long as this is resistance, you should expect markets to go down, which might explain why it's down this past week. but if it can break out above that line of resistance, maybe there's some upside. So the level to watch here is 10.59. If it can break out above that level, maybe there's hope. Right now, in my opinion, it looks like it is struggling, and as long as it is struggling to hold this line, I would expect this market to also be looking at lower prices in the coming weeks. But if it can jump above that resistance line, that would be great for bulls. If it can jump above 10.59, that would also be great for bulls short term. Let's take a look at the South African stock market, and this market has been on fire. I have to admit, I haven't looked at this chart prior to today, but this market has been on fire. Maybe at some point it's due for a pullback, and man, very strong market. We can see here that the RSI continues trading above 69.1. So just like most world markets, here's another strong market. In fact, if you take a look at the monthly chart, it looks scary good. So this is just too good to be true. At some point, all these world markets are going to have to pull back. When that will take place, I don't know. You can see here that as far as the South African market is concerned, ever since, let's call it about 2012, mid of 2012, it's been generally holding above 69.1. It recaptured the level above 69.1 again here at the breakout middle of 2013, and it's been generally holding above 69.1 since then. In fact, if you take a look at a longer term picture, this market seems very extended, and it's not the only market worldwide. Take a look at this nice move which led to the crash of 2008. Take a look at this nice move. Obviously, this is too extended. At some point, these markets are gonna have to correct, and probably correct seriously. So looks good as of right now. The momentum, you ride the momentum as long as the riding is good. Let's take a look at the Indian market. Now let's take a look at the Indian market, which was down. As you can see here, that the Nifty was down about 1% as of Friday's close. Right there. So let's take a look at the charts, see how they look at the conclusion of the week. And we can see here that if we take a look at this weekly chart, we can clearly see that now the market has come back to a level of support on the weekly RSI. So you can draw it this way, or you can actually go back and draw it like that. In fact, if I go back to 2011, so give me a second here, something like that, you can see that this is very clearly an area where one can expect support, because it nicely comes back to this line. So this needs to hold. Another thing that I've been mentioning the last couple of weeks is the market does need to move back above the 50 level. It needs to move back above the 50 level as soon as possible in the next couple of weeks, just like it's been doing the last couple of periods where it's come back to the 50 level. The market has been having nice bounce, uniform activity below the 50 level, and the market did move up. You can see another area of uniform activity below 50, back above it, which is this level. All this have the same quality in that the RSI did move below 50, but would move back above 50 with uniform activity, which made this nice entry areas in the market. So that's one way to take a look at this. Another way is quite simply to figure out where this move began. So off these lows of late 2011, so since then the market hasn't seen new lows, so the market has been grinding higher over time, as you can see here. So we can draw a simple straight line like that, and this line is critical in telling us where the RSI gave a buy signal on hindsight, and we draw a simple line from there. Should look something like that. And you can see again, we see uniform activity below the line and back above it, gives you a nice entry point back into the market. Uniform activity below the line, back above it, nice entry point back into the market. All this have the same characteristic. Uniform activity below the line, back above it for a nice re-entry there. Recently we had come close there, which was this lows, and now we are back here. So over the next 1-2 weeks or so, if the market can hold here and start rebuilding, then this is a logical area. Not just, it doesn't have to be precisely at this price, but somewhere around here would be a logical area for the market to start moving to the upside. Let's take a look at the daily. And on the daily, a couple of things. We can see that on the trend line connecting the lows of early 2014 on the daily, we seem to have broken this trend line. So that could be a problem. I don't think it's a material break as of right now, because the weekly has not broken down yet. So I would not be too quick to call the end of this market based on this trend line break. So if we take a look at the best entry in the price of this early part of 2014 on the daily, we can see the RSI broke out at this point here. So we draw a simple straight line, which I call uniformity. Should be something like that. And the market does need to be back above the blue line if it is going to rescue itself. So that's the key. As long as the market is trading below this green line, then the bears are in control of the market. So the market does need to be trading back above that area here if it's going to start moving higher. I also spoke about the fact that the MACD had moved above zero and back below zero with uniform activity. That was a red flag. And so my thinking here is, depending on how the MACD behaves, as long as the MACD is trading below zero, there's going to be some residual selling in the market. It's only when the MACD finally moves back above zero that one can have confidence that the market is starting to prepare itself to go higher. So the MACD does need to be above zero for the market to start looking like it has some traction to the upside. If we take a look at the hourly, we can see here seems like it's a break, but not too fast. Because if you take a look at this hourly chart, you can see that this is the most recent lows on the hourly, going back to I believe late 2014, and we can see that this is where the RSI broke out somewhere here. So that, on hindsight, was a nice place to go long, and so we draw our uniformity line like that. So on the hourly, as long as the market is holding above this line, which is where it closed, the market should be okay. And as an example, you can see all these periods here, all these main lows did come with uniform activity below the line, back above it. Even this main low here came with uniform activity below the line, back above it twice. Even this low here, you can see uniform activity below the line, back above it. And even this big drop was uniform activity below the green line, back above it, which was a re-entry somewhere here. So right now we're looking at the market trading at the line. Clearly, if it can just hold and start moving higher, the hourly RSI tells me that more than likely this is where the market could start bouncing. Also, we had talked about this all week, that this break of a trend line, so this MACD crossover, the MACD crossover below the trend line break tends to be more reliable. Generally speaking, MACD crossovers below zero are not as reliable, and you can find some educational videos about this on my YouTube channel. But here we see that now we crossed over with a trend line break, so that's a reliable MACD entry. Also, if we can just move above this slight node, if we can coil above that, then that's the buy signal that you need. Confirmation of strength will be confirmed again when the MACD moves back above zero. For those of you who like to get a clearer signal here on the hourly, just wait for the market to move above this recent RSI declining line. So if you want to wait for the best time for confirmation that the market is actually showing strength, it needs to be moving above that declining line on the hourly RSI. So it needs to be above that line. Otherwise, net I think the weeklies could hold. The dailies are not the best, but the hourlies are okay. So if you take all that together, in my opinion, if the weeklies can hold, so again we go back to the weekly, if the weekly can hold, and so let's go here, if the weeklies can hold that support line number 1, if that can hold number 1, and number 2 was the line coming from the entry point, so it was the line was coming back, going back to 2011. If it can hold this line here, so those two lines holding would be what the bulls want to see. Otherwise, if we break below those two lines and trade below that, that's going to be a little bit inviting lower prices. Right now, in my opinion, with markets making all-time highs, I think this is a market that could bounce.